Well, good evening, X. How is everybody doing? This is my third live stream of the day. We had a couple of good ones. The morning live stream was really good, but the afternoon live stream was really good too. They were different, but really good. Anyway, if there's any questions, I think there's a question from someone named Bob in the afternoon live stream, and I said I would get to it. It was about Granite shares, and somehow I got sidetracked, go figure, and didn't get to it. But anyway, if Bob's here, or if he, I'll try to answer that again. I'll give you priority this time, Bob. I'm sorry I forgot to do it, or whatever the case may be. My bad. All right, so let's see what the heck is going on. I guess while we're waiting for people to get here, there's only 3 people here. I posted it on X and other places, but let's look at the market really quick and hope this thing's bouncing. Let's look at Misty trading after hours. No, it's not. All right, well, let's just look at S&P futures. Futures are the tail that wag the dog. Now they've continued to sell off. It looks like we peaked out about 2 o'clock my time. Well, actually more like 1 o'clock my time. Anyway, and then we kind of sold off from there. We bounced a little bit, and now we're back under the yesterday's make or break line. So this is definitely a win for the defense. But I mean, right now the defense is pushing the offense back. We wanted to stay on this side of this line, but we'll see where we open in the morning. Lots of stuff can happen, and between now and then, but really in the next first down would be if we take back this trend line. But first we have to get on the other side of this line. Anyway, we'll keep an eye on that. So that's CES futures. Let's look at NQ futures. Then let's look at Bitcoin. Yeah, I mean, we almost got back. This would be a victory for the bulls, and the NASDAQ would be to get above this line and close above it. And we were driving that direction, but we couldn't quite get there today. The bears shut us down. So we'll try again tomorrow, hopefully, unless the bears pick up the ball and start running down the field the other way. Who knows? We'll see what happens. Have to take it one day at a time. All right. Bitcoin. So what's going on here? Looks similar. It looks like everything topped out about midday. This thing topped out more around 2 or something, and then it's been selling off. Anyway, we're still doing better than we were a few nights ago. All right. So be that as it may, you guys ready for the max factor? So the max factor, let me tell you what it is. It's my own proprietary metric. No, traditional Wall Street will tell you look at total return, and that's fine. That's as good of a measurement as there is until I invented the max factor. But the total return, you can have 2 securities with the same total return, and they can have vastly different properties, especially in these high yield ETFs. The high yield ETFs broke the matrix. When they made the high yield ETFs, nothing was ever supposed to yield that high. It broke the metric. It broke the total return metric. So we will see. So tonight we're going to use the max factor, and we're going to compare. We're going to dive inside. I'm following 157 funds. Well, tonight we're going to look at MicroStrategy based or strategy-based high yield funds. We're going to look at Coinbase high yield funds, and we're also going to look at NVIDIA-based high yield funds. And that was a request from somebody. It could have even been Chad, who's in here right now. So we'll see. If it wasn't Chad, it was somebody else that was in there last night. But this was by special request. Tomorrow night there may not be a max factor because I have plans. We'll see. I'll try to get one in. But anyway, so this might be the last max factor till Friday night. So enjoy it while you can. There's 13 of you here. Let's start this darn show. 13 is not a bad crowd for this time of night. All right. Well, let's see. Which one do we want to start with? Let's start with actually MicroStrategies because they have the most underlines. So we'll look at the MicroStrategy surrogates, high yield surrogates. Like once again, this is according to the daily factor. It's based on the past quarter's worth of results. It looks further back than a quarter, but really it's using the past quarter's worth of results. So it kind of picks up some elements of momentum. Also, momentum's an important thing. So let's yield chase, like I always say. Let's start the yield. Okay, well there we have it. Misty has a 230% yield. Now, that's not a real yield. Part of that yield is because the price is lately of Mister has been in a free fall, and therefore the NAV of Misty is also not doing well. It may be doing slightly better than the NAV of Mister, but in any event, it bounced today, and I was really encouraged to see that Misty actually got more upside than Mister. I don't know, maybe they didn't have any coverage from covered calls today, or maybe they only covered, like a fourth of the portfolio. I don't know exactly what they did. It doesn't really matter to me. I'm a big picture guy. I'll let Scott Snyder and Jay in the trading team handle that. They probably have one guy that's in charge of micro strategies, and then I'm guessing, and I bet you that Scott supervises them, and then Jay supervises Scott. That's what I would imagine how it works. But anyway, whoever's doing that great job not using full coverage today, which would cap the upside out. They could have also just used options that were 10% out of the money or something. They may have gone super far out of the money also. That would also keep them from being capped. But yeah, Mr. Strategy was up, I think 3.7, and Misty was up 3.9. Something like that, or 3.6 and 3.8. It's some relationship like that. Anyway, great job. But that yield is not really a yield. A part of it's because the price is declining. The max factor understands that, and it adjusts for that. So it's not going to give it extra credit for that yield any more than it deserves. Now, Misty does pay a high yield. Now, I don't think anyone would dispute that, but it's not that high. Anyway, MST. Now, this one's from Defiance. It's double leveraged. I don't know about this fund, but I mean, the NAV's a hot mess. It's down from 15 to 9. Anyway, let's look at iMist. Now, this thing is paying 154%. It's also NAV's under pressure. Anyway, we'll talk about the NAV in a second. Then we have MSTW from Roundhill. A lot of people really are liking these W series funds. They use a little bit of leverage, and they use a total return swap. They don't really sell options. I'm still saying that they're getting option premium indirectly. I would bet you anything that their swap counterparty is selling options to pay off their total return. But they may not be. But I wouldn't be surprised. If I was your counterparty, I would sell option premium, pay off their swap, and use the option premium for my own little profit, or as an extra profit center. But they don't let me make these kind of decisions. So in any event, we have MS2 down here with the 54% yield. And I thought it was only fair to include the MicroStrategies preferreds also. So we have Stretch, Stride, and Strike. I don't know a whole lot about those, but we'll see but I do know this. STRC has been doing really well on the max factor lately. Whatever it's doing well. I think it's some kind of convertible, and it's something good happens if Strategy's price gets to 1,000, you can convert it to stock at that point, or something like that. Anyway, let's look at NAV. Let's just say if we only cared about NAV, we would get Stretch. I mean, Stretch is this preferred stock. I think that converts to regular stock at 1,000 or something like that. It has some type of element of that in it. So it's a lot. So in other words, it's a long-term bullish bet on Strategy. And all of these are bullish bets on Strategy. None of these are going to do well as long as Strategy goes down. Strategy goes up and makes a new all-time high. These things may not make new all-time highs just because of the nature of what they're doing, but they should be doing really well. A lot of people that were in on Strategy earlier, or Misty early, I should say, are on free money. It took them like a year to get free money, or to be paid off, to have enough dividends to offset the entire price of the purchase. Now, I bought, full disclosure, I bought Misty December 12th of last year, and I'm underwater and I'm dripping it, and I'm underwater like 32%. I'd only be underwater like 21% had I not been dripping it. But when you drip a loser, you're compounding losses. But I have confidence in Michael Saylor. I think it's going to turn around, and I think that drip will come in handy. Plus, I don't have very much of it. It was too volatile for me, so I cut the size back in March. So I didn't really experience that whole loss. But in any event, but I have a token amount right now. Anyway, so then we have the next best one on NAV is the other preferred one, Strike. Then we have MS2 from Rex. Now, this is interesting. I was just talking about how I didn't think the managers at Misty sold all the options that they could have today. They either went super far out of the money, or they maybe only sold options on a portion of the portfolio, some combination of that. Well, MS2 has turned that strategy into has turned that trade into a lifestyle or into a strategy. They only sell options on half the portfolio on a daily basis. This is from Rex, and this should do better on upside, but because you aren't writing as many options, it's going to do worse on yield. But if you can deal with the 54% yield and you want some upside, I mean, MS2 is not a bad option. Then we have Misty. Of course, it's down 46%. And to be fair, the Rex fund doesn't have much upside. It's down 43 and Misty's down 46. I mean, but it does do slightly better. And it also hasn't been out as long. The Rex funds, I think, came out February. And well, some of them came out February and some of them came out in June. So I don't know which one this is, but in any event, then we have iMist and then we have MSTW, and these are just messes. I mean, down 50% on NAV. Now, I mean, granted, you can be down 50% in NAV and still pay a yield and, do all right, I guess, but we'll see. We'll see which one the max factor likes. And then there's MST. This one's double leveraged. All right. So whereas MSTW from Round Hill has 20% leverage a week, this is double leveraged on a daily basis. It's double leveraged. So, and it also pays you an income. But this thing is going to be particularly a rough ride on the way down. Leverage helps you on the way up, but it hurts you on the way down. It's a two-way street. All right, so let's see which one of these wins is the most stable. And of course, it's the preferred stock. That shouldn't surprise us. All the preferreds are more stable than all these other ones aren't really stable. One is the benchmark for stability. That would be the same stability as the overall market, i.e. the SPY or AKA the SPY or the SPX. So you could look at, like iMist is like 23% as stable as the SPY. In other words, it's a hot mess. The one that's the least stable, that's the least stable on the whole max factor index is MST. Like I say, this thing will do well on the way up, but it's been a rough market and they're double leveraged. So go figure. Now, I made a new thing. Now, we'll talk about that later. The safety factors kind of, now let's just see what it says. Stretch, of course. All right. Well, anyway, let's look at the overall winner. Are you ready? Which one do you think is going to win? I think, don't cheat. Well, Stretch is obviously going to win, but which one of the true strategy surrogates is going to win? I'm saying probably, just looking at it, probably MS2. I mean, but I don't know. MSTW or really MSTY might win because it's not down all that much more than, we'll just have to see. But I wouldn't be surprised if MSTY gets up there. And by winning, it's going to be the least bad. All of these are doing poorly because Mr.'s doing poorly. But let's see. Short-term max factor. Yeah, there it is. Oh, it was already lined up. I'm sorry. Anyway, so stretch, strike, and stride. Okay, well, there's kind of different. It's not probably a fair comparison. But look at this. MS2, sure enough, that they had decent compared to the other ones, NAV return, and in a really nice yield. So super volatile and stuff, but that's just kind of what you get with these stocks. All right, I hope your favorite one won. So let's go to NVIDIA. I need to get a drink. I took the dog to the dog park. Not really a dog park, just a place I go it's like a dog park. But anyway, the big open field, they like the dogs will come from the neighborhood and play. It's not an official dog park, but great place here in town. And I was talking to somebody else there, and Jax was over rolling in the dirt or something. Anyway, I wasn't really paying attention to him. So I walk around and catch up with him, and he rubs up against my friend's leg. And my friend looks down and said, "Your dog just got dog crap on my leg." And I said, "That's not, it's just mud. Jackson, I'm a bad dog." And so I reached down, I put my finger on their leg, but then I didn't smell it. I was going, "Oh my gosh, I think you're right." Anyway, it was a disaster, and we came straight home, and Jack's got washed with the hose, and man, all right. That's the first time he's ever done anything like that. All right. So let's talk NVIDIA. Let's go yield chasing, right? Why don't we? So NVYY from Granite Shares, good looking yield there. 99%. We have NVDY with an 80% yield. That's not bad either. Then we have NV2 with a 38% yield. And then we have NVDW from Round Hill with a 35% yield. Some good choices in there. Let's look at NAV return. The best NAV return is actually NV2. And let's look, it's gone from 32.46 to 31.81. That's not bad, considering, AI hasn't been that as hot lately as it once was, as it was back in, the summer was June, July, and August were just face ripping rallies. But it seems like we kind of peaked out in October and some of those high beta names. Anyway, so it's been kind of rough going lately, but NV2 is doing a great job. Now, NVDW does a great job also. NAV was down about 4 times as much, and it paid a little less yield. It's gone from 52 to 48. That's not bad. That's not bad. Then we have NVDY. Now, this thing's actually done decent on that. It's gone from 1773 to 1620. It's down 8% in NAV, but you're paying an 80% yield. Not bad. And then we have the Granite shares entrant. It's paying a 17% yield, and it's down. It's paying a 99% yield, but its NAV is down 17%, unfortunately. All right, let's see which ones are the most stable compared to the SPY, and it's actually NVDY. And I know a lot of people don't think of YieldMax as stable, but since they sell options on the entire portfolio, it does a couple of things. It caps their upside. Now, they do sell spreads, but still the upside's capped for, pretty well. And they do get some upside if they can get beyond the far strike of the spread. But when you sell options like that and you're trying to max out yield, it absorbs some of the down movement. And I think that's why it is a little bit less volatile than the others. It's not much less volatile. It's only 41% of the SPY. NVYY is 37%, NV2 is 34%, and of course, Round Hill with leverage I would expect that one to be the least stable. On safety factor, it is NV2, and I think that's a good pick on safety factor. All right, what do you guys think on this? I say it's NV2. You have NV2, especially compared to NVDW. Nothing wrong with NVDW, but over this look back period, NV2 paid more yield and had better NAV return and more stable. It's got to be either NV2 or NVDY. Let's see what it is. NV2. Okay, so 36% yield. NAV's down 2%. It's stable, maybe not as stable as NVDY, and not even statistically as stable as NVYY. And remember, my stable metrics is just looking at the past 90 days. So this can always change, and it's just one measure of stability. There's I'm sure other ones that we could look at, but that is the max factor stable DEX. All right, well, I'm fine with that one. I think that one's good. That's a good compromise. 38. Who needs more than 38% yield? Really? Come on. If you need 80 or 90, maybe there's better options for you. But anyway, all right. So now let's do this. Let's do the next one. This one is going to be, gosh darn it, I don't think I downloaded it. Gosh darn it, that's from last night. I swear to God I downloaded it, but I swear to God I opened it. It's up there. It's up there. It's got to be up there. All right. Well, here we have it. So let's go yield chasing. This is Coinbase surrogates. So we have ICOI. I think this is from a company called Bitwise that I don't really cover that much, but I'm curious about him. Bitwise curious. I'd love to have the PM on the show if he's listening. So anyway, 212% yield. That's something else. Coney is from YieldMax, of course, 174% yield. COIW from Round Hill, 84% yield. And then we have CO2 with the 57% yield. So lots of yield available. And it's because Coinbase is a volatile stock with pretty decent typically pretty decent option premium, and these guys are able to generate good yields. Now, the yield's only part of the story, and the max factor looks at how the yield interacts with the NAV return and how it contributes to the overall safety and everything. So let's go see. Let's talk about NAV return. Which one's the best NAV returner? All right. Well, it's CO2. Now, it's still down 9%. It dropped from 24 to 22, but come on, it's not that bad. That's really not that bad at all. I mean, when you get 57%, you almost expect that, the NAV to be down. I trade eight points for 57 points all day long. I mean, so anyway, that's, in my opinion, that's fine. But then we have Coney. If it's not enough yield for you, you can get more yield with Coney, but of course it's going to hit the NAV a little bit harder just because of math. And then we have actually COIW from Round Hill paying less yield compared to Coney and having worse NAV return. That's a bad look for COIW. I mean, just in this over this quarter, based on this comparison, or it's a good look for Coney, however you want to look at it. Coney's actually, beating on NAV ever so slightly and beating on yield, which isn't the usual configuration. Like I always remind everyone, a high yield is a tax on the NAV's future upside. All right. And then we have ICOI from Bitwise, and its NAV is, it's down 33%, but it's paying 212. So, but still losing 33% of your NAV in one quarter, that's not ideal, right? It could cause a margin call. It could cause you to have paper hands like I do and sell or whatever, like I did with Misty. I had paper hands with Misty and I sold it back in March. I think I made the right decision. But I sold most of it, but anyway. All right. So let's look at the stable deck, see which one's the most statistically stable compared to the SPY. None of them really. I mean, they're all messes. They're all like a quarter as stable as the SPY. So meaning 4 times as volatile as the SPY. And then we have Coney and ICOI tied. That's pretty good. Once again, people wouldn't think that Coney is stable, but when you generate all that yield, the way they do their options, it actually, even though these things get a lot of the downside, it doesn't get as much downside as COIW, and that goes into the stability, especially in a stock that's been down. All of these are basically down on NAV return. So in any event, it's just one way of looking at it. Safety factor, okay, the safest one. And by safe, I'm looking at the stable index, and then I'm looking at the performance, and I'm getting the best performance per unit of stability. All right. We want as much stability as possible. It's just another way of looking at it. But in any event, stable factor, it's CO2 from Rex. Good job, guys. Even though doesn't have as much raw stability, it's still ahead on the stable factor. All right. And so what do you guys think? It's got to be CO2, right? I mean, 57% yield and the best NAV return of any of them. I mean, it's got to be CO2. Let's go see what we have. Yep, there we have it. CO2, 57% yield and 8% NAV. Yeah, like I say, I trade 8% NAV for 57% yield all day long. If you could get an ETF to do that consistently, of course, yield doesn't equal total return, but that's the wild card. But if you could get an ETF to do this consistently, and you could find a stock that's going up, you need the underlying to go up or at least go sideways, but preferably up, really. So, then you could do pretty well trading 8 for 57. Like I say, yield isn't total return. It may only total return 20 or something, but whatever. Trade 8 for 20 all day long, or 8 for 30. 8 for 20 is not that impressive, but maybe 8 for 30 all day long for sure. Anyway, then we have Round Hill's doing a good job also. If you want more yield, there you have it. A little less stability. That's fine, though. I mean, it went from 45 to 33 or 42 to 33. That's not ideal, but it's not as rough as some of these other ones. So that is it for the max factor. What is going on, Froggy? How are you doing? Now, Froggy has the wrench tonight, and none of you guys act up. Froggy has a trigger finger. He is not afraid to jump in the middle of a conversation and take one for the team, right, Froggy? Oh, we got Marcus here too. You definitely don't want to mess with Marcus or Froggy. All right, guys. Well, let's see what's up with you guys. I also have a printout of the entire table with the new metric in there. So we can look at any ETF you want to. If Bob's here, or if anyone remembers what Bob's question was, it was about, he said, Max, what do you think about, and it was a Granite Shares fund. I think it may have been TSYY or MSYY or something. Anyway, but I'd be happy to answer specific questions. All right. So let's see what you guys are saying. Let's see if you guys are saying anything interesting tonight. MS2, yeah. You guys are just responding. I'll get next month. I'm getting a second monitor, and I'll be able to monitor this in real time. So I'm going to do that here in a few days. All right. So what are we? STRC looks like it's rock. So some people will really like that. Yeah. STRC. I mean, like I say, I admit when I don't understand something, it's some kind of convertible security. It's like a stock and an option. Usually has an element like an option. It has a kind of like a strike price. I think the strike price is 1,000 something. But anyway, all I know is it's stable and it's beating a lot of other things on the max factor. Just looking at the performance, it's performing well. So I'm definitely interested in that one. All right. Yeah. Sometimes dogs do like rolling in smelly stuff, like dead stuff. And I've never had a problem with Jackson. He has never got sprayed by a skunk. He's never rolled in poop before. I've had him 5 years, and I don't know of anything bad he's done. Sometimes he gets in and he used to tear up stuff he's not supposed to. But other than that, he's a great dog. So we gave him a pass. I felt so bad having to get him out of the car. It's kind of chilly here in Austin. I mean, not really, but not compared to back east, but it's probably 65 or 70. Beautiful night though. But I got him out and washed him in the hose, and the hose water was pretty cold. Usually I wash him in the summertime and the hose water's hot, anyway. But yeah, dogs do like to do that. They do like to do that. Yeah. The funds are doing their things. The funds are funding, right? So yeah, it's an instinctual drive. Jackson likes to roll in the grass or the dirt. And I've heard that, like with the cat, they like to they don't like oily fur, and I think this may be for dogs. My mom told me this. I don't know if it's true, but she never lied to me. She said that cats would do that because they roll in like sand or grass because it absorbs the grease or whatever. It's their way of keeping clean. So, but Jax is big time into doing that. He rolls in the dirt a lot, and I have to give him, and then he gets smelling like dirt, but he's never rolled in anything like a dead animal or something like tonight. Unfortunately, Jax hasn't made any girls go crazy about me yet. Jackson, you need to do a better job being cute. He hasn't never been a side man. I've never found a girl to talk to because of Jax, but maybe someday, Jackson, maybe someday. There are times when having diamond hands can come back to bite you. There's no right or wrong answer. Some people say, well, you got to hold. And sometimes if you hold, it's the wrong thing to do because, you, without knowing the future, you don't know. I mean, think about somebody that's like, I'm going to hold Bernie. It may be the right thing to do in a year from now. It could come roaring back, and somebody that's been dripping it the whole time has a bunch of shares someday, but it may not, so yeah, there's no right or wrong. And everyone says dripping's the right thing to do. Well, yeah, but you have to pick an ETF that's going up. I still think it's an all right thing to do, but it would just know it can hurt your return in an ETF that's where it has a negative total return. So, but the other thing is try to stay out of ETFs that have negative total return. But the best way to do that is only pick ETFs in stocks that have positive total return. But of course, there's no way to do that. I mean, you're at some point you're playing the market. You make your guess, and you do the best you can. But yeah, Stretch does look interesting. Yes, I saw that Yulmax just posted their Target 25 funds are launching soon. Like I say, and no disrespect to Yulmax, but I bet no one buys them. And I hope, but I'm saying I bet they don't get, I mean, anyway, I wish they would do that on an index, but I guess they already have their index ones are like target funds. They aren't really, but they have some other ones they manage over at Defiance that are Target 20. And I think the other is Defiance, I think also does Target 30s now. I think triple QY is a target 30, and I think QDTY is well, the QDTY is no target, but it pays a little bit less. And then they have then Defiance has triple QT, which is a 20% target. So I guess there's enough of those around. If you want a target return, it's hard to find a better one, in my opinion, than triple QT. But to be fair, it doesn't show up on the that highly ranked on the max factor that often. I mean, it is what it is. All right. Never had a dog, only cats. Well, yeah, I wonder if that's what my mom said about cats. Yeah, dogs are fun. Dogs are fun. They're awesome. Cats are awesome too, though. I love a good cat's worth their weight in gold. Cats have a bad reputation and stuff, but I mean they can. But I was raised with a bunch of good cats and dogs. We always had 2 or 3 cats and a dog or two. But yeah, a good cat, especially a big tomcat. We had a couple of big tomcats that would go hunting and bring home dead squirrels, leave them on the porch and make my mom scream and stuff. But yeah, a good tomcat is worth its weight in gold, in my opinion. Yeah, so Defiance is the target 30. Okay, well, I've talked about enough stuff, but let's do this. Do you guys want to just check the overall? We can check everything. I mean, let's see what the safest ETFs are based on my new metric, the safety factor. And like I say, this looks at performance per unit of stability. I mean, you want to maximize, this one's stability at a reasonable price, or maybe you call it performance at a reasonable stability. I don't know, but it's just another way of looking at it. It's not going to take over the max factor itself. But it's another way of looking at it, and it just factors in the ones that are stable and kind of the whole ball of wax type thing. And I mean, I don't think many people would argue with Goop or iGold or TSLP. Now, Spin's an interesting one that is no one ever talks about now, but it's doing really well on the safety factor. And look at that, it's more safe than the SPY. But it pays an 8% yield, where the SPY pays 1.5%. Its NAV is up this quarter, not nearly as much as the SPY. I mean, but in other words, if you're looking for a safer one, that one meets the criteria. Then we have TS2, XYLG, K Gold, which I bought 2 days ago. SOX EGEPQ, IDEVO. Somebody in the other stream was talking about IDEVO. They were saying they like to use that one for stability. And they said they like to use that one and the Schwab SCHD, and I just forget who it was. Probably it could have been any of you guys. But anyway, I apologize. I forget. QYLG, GUI, Biggie, man, Biggie's a monster. QILD, I like QLDY better. I'm not big into these Global X ones, but as far as stability, because they pay a smaller yield, they are somewhat stable. The at the money options, they write at the money options, I believe, or if they do go out of the money, they don't go out of the money as far as other ones do. That actually contributes to stability also, compared to going out a little bit further. Then we have Devo, IWMI, Goldie. Anyway, you guys get the picture. Now, just sort of by the max factor, this just looks for best risk-adjusted performance. TSLP, TSLY, TS2, GUI. I mean, GUI's killing it. AMDW. I mean, the AMDW is never going to win a safety contest, right? And we wouldn't expect it to. I mean, but it fulfills another, it's a different breed of cat, so to speak. Goop, TSLW. But anyway, if you guys have any ones you want to look at, we can darn sure look at them. Look at the least safe funds: XBTY, ULTY, IMIST, YQQ, MSTW, AIYY, MSTY. No disrespect to any of these funds. It's just based on a quarter's worth of data. And if these underlines would start going up, like Misty, if Misty's underline go back and make a new all-time high, this thing would be definitely off of this list, and it'd be back in the top 10 or top 20. So, and if I look at the 1 year long max factor, which tonight we're looking at the short term, which is the quarter. So this is like a trading index. If we look at a longer term max factor, Misty is usually up there pretty high, and so is Coney and stuff. But recently it's had a rough quarter. So, Fibby, Fibby used to be a shining star, but it's fallen out, it's It's fallen off its NAV's getting crushed. It pays a low yield relative to some of these other ones. And it's not very, and it's not very stable. So, we looked at the best, we looked at the worst. Let's look at the most stable. Now, this is the most stable, but I didn't want to just sort it by stability. That's why I made the safety factor, because this gives you ones that are too stable, that just don't move at all and don't have any chance for upside. I wanted to, the safety factor gives you, it's looking for the whole ball of wax, so to speak. But I would be happy to take questions, and we can line up any funds that you guys are interested in. If there's anything you're interested in, if not, and you guys have to go, it's 10 o'clock on the East Coast. You can be excused, and I'll talk to you tomorrow. I really don't have much else to say. We could peek at the market one more time, maybe. I'd be glad to talk, but if we're out of stuff to say, that's good also. But anyway, for the super safe ones, I mean, FIAX, I mean, that's a great one from X Funds, our buddy David Nicholas. Bondi, that we have two of those somehow. HYGW, based on high yield corporates. Riser, a good one if you think interest rates are going up. XYLD, STRC. I mean, STRC is really checking a lot of boxes. I mean, doesn't have a lot of NAV return, but I mean, it has a decent yield and a ton of safety. CEFS, I mean, that's a good one. I bet CLM is somewhere close, but CLM's a little bit, as far as closed-end funds go, it's a little bit higher performing closed-end funds. So I think it's fine that CEF is ahead of it because it's paying like a third of the yield. But then there's YYY, which is a closed-end fund of funds. Anyway, let's go see where CLM is. It's going to be right here somewhere. Well, RSPA, that's a good safe one. That's based on the equal weight SPY. Only pays 9%, but that's a good fund. It's 34% more stable than the broader market. TLTI from our friends over at NEOS. That's a good one that I'm kind of interested in. Next time I want a bond fund, I'll probably get that one. I really want to add some NEOS into the portfolio. WDTE, JEPQ, Goldie. There's Will doing a great job. I mean, Will, super stable, relatively safe, super stable, decent NAV, 12% return. What more do you want? Like I always say, what more you would want is like 24% return, but you can't have it all, right? All right. So QS. I'm sorry. QS. What's QS? QuantumScape? I don't know about Quantum. It's not a high yield fund. The max factor is just for high yield funds, but let's look at QuantumScape. If there's a high yield fund based on it, that's awesome. Yeah, QuantumScape. I've looked at this before, but I mean, I'll leave that up to you guys. I'm the option guy, the strategy guy, and you guys are the ones that have to tell me what the hot funds are, the hot single stocks. But I mean, yeah, why don't they make a high yield fund based on that? I mean, let's do this. Yeah, I have no doubt this is a monster. This is a monster fund. Let's just compare it to the SPY, and it's just like dogging it. Yeah, look at that. Heck yeah. Now, for a while, it was underperforming, but it took off with a vengeance. Anyway, nothing against stocks. I can't really compare them in the max factor. We can talk about them, though. How much does XYLG pay if you yank out that mega pay? Okay, well, XYLG, yeah, it only pays 6%. But that's the beauty of it. That's the absolute beauty of it. Because Global X is, not known to be a real hotbed of covered call funds. They were the first, and they're stable and secure and probably a well-managed company, but they just get zero upside. I mean, just zero. Because they use real close to at the money options, or they used to use at the money. I think they changed their formula and they go a little bit out of the money, but they just don't get upside at all. So their solution to that is the same as YieldMax is doing. They made a fund and it's just a half. So their other funds target around 12. They don't call them target funds, but I've looked at I've studied their data, and they're basically target funds. That one fund, what they do is, I don't want to explain it right now, but it's basically a target fund. They pay 12 when they can. At times when volatility gets compressed, those funds go down to 10 or 9. They were down to like 9 or 10 in like 2015. I did some content on it. So, and XYLG wasn't around in 2015, but had it been, it would have been like a 4 or 5. They write options on half the portfolio. So that's the deal. So yeah, 6% if you took all that out. And so, I mean, it just depends on what you need. I think though you'd be better off, in my opinion, going for a little bit more yield chasing just a little bit, and getting Big Y or K Triple Q, something like that. You get a little bit more yield or quite a bit. The difference between 6 and 9 is 50%. You get 50% more yield with K Triple Q, and you get double the yield with Big Y. And I bet Big Y beats it. Big Y is beating the world lately. Big Y is a monster. I mean, Big Y was beating the SPY for a while. Now, somebody made the comment that it's not a fair comparison for the SPY. And correct, it's not. I have to benchmark it against something. It's the 50 biggest funds. You can make a case that the 50 biggest funds, a lot of them are in the NASDAQ also, probably most of them. Or so, yeah. I mean, and I don't think Big Y's beating the NASDAQ, but still it's doing pretty darn well. But yeah, its parent is not the SPY for sure. Its parent is but I mean, it's running right with it. I mean, it's a superstar. And the reason is just because of math. I mean, if they could use the same funds, and they could generate maximum yield, which on those set of funds would be like 30 or 40%. Basically, GPTY is the grown-up version of Big Y, I think. It has the same type of big tech stocks, but it goes for higher yield. So let's look at GPTY compared to Big Y. Yeah, GPTY is a monster. Oh, gosh. But, it just depends on what you need. Just depends on what you need. But yeah, back to what my original thing. If you want stability instead of XYLG, I might look at Big Y or K Triple Q. Let's look at K Triple Q and Big Y. I bet K Triple Q beats it, but they both do a good job. Yeah, K Triple Q beats it. Pays less yield. Instead of paying 12, it pays, or wait, is Big Y a 10% target or 12%? It's 12% target. Instead of paying 12, it pays about 9. So that is 25% less. But, it looks like it gets about 25% more total return. And, and it looks like it gets about, it looks like the NAV upside is about the same. I mean, Big Y went from 40 to 53 since April. I mean, that's amazing. Now, K Triple Q went from 20 to 29, which is the same thing as 40 to 58. So, yeah. Anyway, K Triple Q's, you have a lot of good choices out there. And don't sleep on RSPA if you're looking for stability. It won't do as well as either of those, but that's the equal weight SPYs. And it'll do better in a downturn than either of those, I would predict. I would think. Although K Triple Q is actively managed, there's no telling what Howard will do. He could do anything. He's liable to do anything in that fund. Just like he is in K Yield. Does anyone have K Yield? Are you guys happy with that? I'm going to come back to the chat now. I'm sorry about that, man. It sucks. I'm glad you're still smiling though, but I just say, sometimes your dividend degenerate. Like, yeah, I mean, sometimes my general degenerate side gets the best of me. I mean, overeating, binging on Netflix, or just not going jogging for a week. Yeah, I mean, turn into a whatever. I've done all that. Trying to stay away from the single tickers. I mean, there's so many good multiple tickers that also do a good job. So this is a good topic, and we can end on this unless there's any pressing questions. Let's look at the whole thing. Let's rank it by stability or safety. Let's rank it by safety, and let's pick the 2 or 3 highest diversified funds. Now, XYLG doesn't really pay 22%, so we're going to exclude that. But we have SPIN, JEPQ, and QILG. Okay, so those are three good choices for safety. Now, they aren't the most exciting, but I mean, they pay 10%. This one really pays 6%. I mean, it should. I know it's just paying 5, but it should pay around 6. And then we have spin. I don't know. I don't really like any of those. Let's go down the list a little bit further. Let's take a little bit less safety and chase yield a little bit more. QYLD, that's, I mean, heck, 12%. Positive NAV for the quarter, relative stability, DVOs, and not enough yield for me. Big Y, we've already talked about that. SPUTs, diversified, not enough yield, in my opinion, for me to get me interested. Triple QA is also what they call a equal weight. It's the same thing as RSPA. RSPA is on the equal weight SPY, triple QA or double QA, equal weight Qs. Here's just a good all-around one that no one ever talks about. Pays 14. This is the highest yield of any of the safe ones we've seen so far. Pays a 14% yield. NAV's gone from 45.83 to 48.79. That's 6%. We'll take it, because the total return on this is around 20% right now. Or if it stays this way over the course of a year, you have 14 plus 6. Remember, total return in a kind of generalized way of thinking about it is NAV return plus dividend or distribution yield over the course of a year. So if this NAV stays up 6% for a year, let's just say it keeps going at this rate, it probably won't, but that would be 24% NAV upside. That'd be great. And it might over the course of a year. 24% NAV upside, paying a 14% yield. What you have there, a 39% total return, and that's a pretty stout fund. Now, this is based on the Russell, and the Russell had a giant day today. Russell was up huge. Anyway, I think IWMI is our diversified champion tonight. But there's some good ones in there for you to guys look at. Look at IWMW. That's a monster. I mean, 22% yield. NAV's gone from 38 to 40. It's up 5%. We take that. Tuggin's not bad. Chippy. I know a lot of people like Chippy. Anyway, we have good choices that are safe and also doing well. No guarantee that'll continue. It's just, remember, this is one slice in time that we're looking at over the past quarter. All right. I really won't let you guys go unless there's any more questions. You guys are just talking amongst yourself. It's all about total returns. Absolutely. Absolutely. I just wanted to go a step deeper. That's why I embedded the max factor. Like I say, here's my example. Let's say you have a stock that you have two stocks. They both have a 50% total return. I mean, which is great. You're saying, okay, I can't lose. Well, one of them had NAV that was down 50% during the year, but then during the time period that we're studying it, but then it recovered and has a total return of 50%. The other one, his NAV was only down 10%, but it recovered and its total return is 50%. Which one's better? In a portfolio allocation situation, which is what I believe you do with these. These aren't for set and forget. They're for putting they're pieces of a bigger puzzle. The one that's only down 10% and made the same total returns better. That's the same basic. That's kind of an oversimplified version of the max factor. The max factor is trying to pull out the funds that give you a distribution. We all want a high distribution, but at a reasonable cost and and without taking too much risk on. All right, Froggy, what are you saying? I don't know. Let's look at it real quick. He wants to know about, in case anyone's just watching, Froggy said, Max, why do you think the YieldMax PayPal fund, or in case anyone's just listening, why do you think the YieldMax PayPal fund is doing so poorly? I didn't really know what it was, but I do know this. We haven't seen it around the max factor anywhere close. So what is it? Is it PayPal or PP? I forget what it was. I know Retire calls it PP, but gosh darn it, I forgot what it was. Anyway, but let's get PayPal in there. So what's PayPal? Gosh darn it. Tell me what the symbols are. I'm drawing a blank. PayPal and PayPal is PYPL. Okay. All right. Well, thank you for the assistance, Froggy. Yeah, PayPal. I never did like how Retire called it PP because it was doing good. It wasn't. Now you could call it PP and it's not even ironic. But it used to be too ironic to call PP. When I used to watch him like 2 years ago, and it was doing well for a while. PYPL. All right. Well, let's just kind of take a look. Now let's go back. I guess let's go back a year and just look at a 1 year. snapshot in time and see what's going on with this thing. Well, I found the problem, Froggy. The parent's down 16% total return. So PyPi's down 12. Covered call funds generally get about 70% of the upside and 70% or 80% of the downside, something like that. Now, the YieldMax ones do a little bit better on the upside because of the call spreads, but generally you're going to get less upside and less downside, but still a considerable amount. Sure enough, it looks like these guys got about 2/3 of the downside. So the cushion's kicking in. It's the same thing, same problem with Mister or Misty. It just needs the underline to go up. And if you look here during the year, you can see that that PP, Protected Capital, a lot better. It was down 15% at the worst point, where the other one was down 25%. I mean, maybe 25% was enough to put your account into a margin situation, and maybe it made you have to sell something you didn't want to. So that's why, in my opinion, that's kind of what the max factor is looking for. But of course, PayPal's not in the max factor because it doesn't pay a yield. So, but I'm just showing you guys kind of the general theory of risk-adjusted rewards. We all want the most reward without taking on an excess amount of risk, right? That's life. We all want to have fun. But anyway, all right, guys, I'm gonna let you out of here. Marcus probably needs to head out, and you guys are probably getting sleepy, but I appreciate you guys for being here tonight. Let's take one more look at the market, see if the market's Kragering or whatever. Yeah, that QuantumScape's an impressive stock. I wish they'd have a covered call fund. Well, it looks like we're trying to bounce a little bit here in the last half hour since we've been on the show. All right, well, we'll see what happens. I'll see you guys in the morning. Thanks for being here, Richard. Appreciate you. Thanks for being here, all of you guys. And thanks to my moderators, Froggy and Skeptic. I'll see you guys later.